All right, just hit went live, and let's go ahead and see how this show goes. Hello, everyone. My name is Joe Boss. This is the daily stream here on Plan to Profit. If you want to join a trading community that focuses on making trade plans every single day for the week and the month ahead, consider hopping into the Discord and checking out some of the research that we do in regards to outlooks, central banks, macroeconomics, geopolitics. We're going to be going over touching a lot of those research topics today, like what's going on in Pakistan right now, geopolitically. Oh boy, that place can certainly be a destabilizing factor in the world going forward. We got NFP coming out tomorrow. But going into NFP, we got a lot of dollar bearishness coming out here. And it looks like in the short term, we're going to continue to see this dollar bearishness, right? So I got a few things to talk about when it comes down to euro dollar and dollar CAD specifically. I got even though yesterday I was showing, hey, there's this dollar CAD trade, and look at how you can, here's how you're supposed to do proper risk management on it, because I lost on that dollar CAD trade yesterday. And I went in and I showed that off. But then I was looking at my indicators, right, after the stream, and I was looking at some more research, and I'm like, you know what, this would be a good idea to go short dollar CAD, and I did pretty well. I'll show you what happened there. I got some research here when it comes down to German inflation, kind of how Europe reacted to those inflation metrics. They reacted pretty darn well. I mean, there's really three major things that happened, at least in the FX space, right? The debt ceiling stuff is still a story, it's still moving forward, and it's still giving people hope that, hopefully the US doesn't see a credit default or a credit downgrade sometime in the next 5 days. Right now, the bill's off to the Senate, and we're anticipating that the Senate will just pass it. So, with that in mind, a lot of the risks of not having dollars available for a lot of the rest of the world, you're going to have dollars available. So now the next thing goes to, well, how are the risks on individual countries behaving in reaction to this, Even though the US is getting its debt ceiling raised, are the countries performing well or poorly, right? And all day yesterday, it was just outperformance, above consensus. So you combine those two things, and you're going to get some serious dollar weakness. Let's go ahead off to the charts and get on to the very, very first chart of the day. So this is dollar CAD. And you can see we also got the economic calendar on the right for NFP tomorrow. I'll say a little thing on that in just a moment. But right here, I don't know if you can see this, but I got a little blue line right here. This is right when the GDP numbers for Canada came out, and GDP came out twice as high as the consensus. So consensus was 40 basis points, and the actual was 80 basis points. So yeah, Canada, oh Canada, oh Canada, you got a bit stronger than people were anticipating, right? And while I even went short on this, I wasn't expecting a huge consensus giant move, right? So, if you look at the actual economic releases, just across the board, all the GDP numbers are doing pretty well. So let's go ahead, take that off. And as far as the short trade goes, here it is. Those are the details. I'm pretty sure you can figure out where that is on the chart. It's like right around here, roughly. And I got that signal because I was looking at this here on the daily. These two little red candles here, right? After getting stopped out on this and seeing the yield spread flip red, from green to red here, I'm like, if I also go and I look at my momentum, it's probably not going to be so fantastic. And yeah, it wasn't so fantastic. Looking at it on a 12 hour is like, this isn't fantastic either. Even if you do get a bullish move, you could just see a bunch of chop here for the rest of the week effectively if it doesn't continue just to go lower. And based off the weekly odds that I was looking at, and I'll go ahead and just pull those up because now we're heading into the end of the week. So we were way up here, right? We were way up here. So it's something like 78, 79% of the time, your low for the week is below this S 0.5 pivot. So it's like, the odds are definitely in my favor of seeing a lower low. The yield spreads are starting after this reversal here to turn more significantly negative, just net negative. So I think it's prudent to at least have some short position on here. And there you go. Oh, is my stream dead all of a sudden? It doesn't look like it's loading. No, it's still good. It's just on my end here in the YouTube studio. Let me maybe refresh my YouTube studio. It's all good, guys. Don't worry. It's all good. Okie doke. So, let's go on to the next. I think I'll say a little bit actually on NFP. Guys, it can get real simple. NFP. If NFP comes in at or below consensus, that's going to be dovish for the Fed. That's how they're going to interpret it. So if it comes in around 200,000 or below, that'll be good for the Fed. They'll be more dovish. And if NFP comes in closer to the prior number, oh, we got the prior number here too. The prior number is just a quarter mil. So if NFP comes in at a quarter mil or like 240K, right? That's going to lean the Fed to be on the more hawkish side of things. I mean, same thing with unemployment, right? If unemployment's going up, that'll make the Fed more dovish. If unemployment keeps going down or maintains its current levels, that's going to make the Fed a bit more hawkish. I mean, that's as simple as it gets when it comes down to interpreting these things. So, the next logical question would be, well, once you understand how the Fed reacts to economic information, Joe, how do I use that to trade, right? Well, I mean, it's pretty straightforward from there, right? If the Fed's going to be hawkish, you probably don't want to be super short on the US dollar. But if the Fed's going to be dovish, then if you already are short on the US dollar, you might as well hold. And in my trading group, when I talked about this trade, I just flat out said, you know what, this is probably a trade you could hold going into the low of the month of June. Like, this could be a trade you hold for like another week or two. So it's not, particularly novel interpretation of these macro events and how to turn them into trades and how to use them as information to, give you a solid grasp of what to do and how to manage, your current open positions. It's not that complicated. All you got to do is learn a little bit about how the economic event is interpreted by the Fed, by other traders, and what it literally does to the economy. From there, when you go and take on your own trades and positions, you'll be able to react off new information based off what you already know and autonomously make, really smart trading decisions. Sometime I got to upload the little slideshow. I made a little PowerPoint presentation on like my little pet SDT, self-determination theory, on how to become a better trader. Sometime I'll upload that as like a bonus video in the week. And speaking of videos for this week, remember, tomorrow's the last video. Tomorrow's the last daily plan for the week. And then Saturday is group video time. So every Saturday there is a week ahead. And also there'll be a month ahead, I assume, at some, especially when we're going into a new month, I'm going to be doing month ahead and week ahead analysis. So if you're in the trading group, just links in the description, right? And it comes with all these indicators. So you get the trading group and the indicators. Every Saturday, there's a private video for you guys. So then you can see, it's only like, maybe an hour or so, like maybe plus or minus 10-20 minutes if there's a lot to talk about. But you can do your entire trade plan for the month and the week ahead in an hour. Like, I go over these charts every day because guess what? There's always something new going on in the world every day that will affect financial markets. So when it comes down to having something to talk about every day, I got a lot to do. But as much as that's all well and good, and helping do risk management every day, on these trades and whatnot, making decisions, a lot of the decisions can be made at the beginning of the week and the beginning of the entire month. Like, you don't need to go into the week or go into every single trading day with a new plan, right? All right. Let's go ahead and actually cover some stuff going on with the euro. So the economic events for euro dollar, eurozone inflation, it came in slightly lower, 6.1, not a big deal, but that actually gave euro dollar also a significant bounce. Not as significant as dollar CAD, but it was quite a move. We can go to the 1 hour chart and go to when the inflation report came out, and you can see that big green bar right there. That's when your inflation report came out. I don't know why some people say, like, just they don't trade or want to be informed about macroeconomic decisions. Like, you can see these things make a huge difference. Huge difference. Like, it's not just central bank meetings that move markets, right? It's the things. Arguably a much smarter way to be trading is to figure out what central bankers are looking at most intensely as far as economic data. And then when that economic data comes out, or just before it comes out, figure out some responsible ways of taking risk and trading that. What's also kind of hilarious is it went to that that support line we were anticipating way back here. So this down move, right, happened. And then on the next day, it went all the way up. And I'm like, oh, man. Oh, man, oh, man. See, this is another reason why it's good just to have your whole plan made for the week and for the month, because you can get this sort of daily noise, and that daily noise will rip you right out of a very good trade plan, right? So it's important that when you make your trade plans that you account for, like, okay, what if it gets a little too volatile? Well, then maybe I should decrease my position sizing. That sort of very basic stuff that very few people actually do. But if you did do it, you'd be able to trade for a very long time consistently, right? Making just a bit of money off every single trade. And that's one of the purposes of actually trading a few assets, right? Just make a trade plan for the week, for the month ahead, on like 3 to 5 assets, and then determine, okay, where am I interested in buying? Where am I interested in selling? If it gets too hot and moves, like the volatility picks up and goes insane against me, when do I absolutely need to consider to get out, right? Simple little decisions like that go a very far way. Now, Nordea, when in relation to the Eurozone inflation stuff, Nordea says this surprise probably came from cheap German transport ticket prices. I don't, I'm not German. Maybe someone who watches these streams who lives in Germany or has lived in Germany can inform me of this. Transport ticket prices can impact inflation that significantly. I mean, I've heard about that occurring in Japan, but Germany, first time I'm hearing this. But then again, how long have I lived compared to a lot of guys who've been trading for a very long time? Maybe they've heard that story before. I'd wait, frankly, when it comes down to how deep to interpret future inflation reports from this one. Don't try and delve too deep into it. I'd wait for new inflation research to come out before definitively saying Eurozone inflation is on track to go lower or on track to go higher. The field was pretty split before this report, and as far as where market expectations are right now, they're still pretty darn split as far as higher or lower Eurozone inflation. The next couple inflation reports, frankly, could bump higher if this little tiny baby decrease in inflation is just some sort of temporary effect, right? From those ticket prices or whatever that Nordea is saying. Or if the higher Eurozone inflation expectations don't materialize into higher headline inflation. That's the other major thing that Nordea actually pointed out. Higher inflation expectations, they have a better correlation as some sort of reaction to oil. So when oil moves up, inflation expectations typically move up. Inflation expectations are just a survey, right? You're just surveying a few groups of people and asking them, where do you think inflation is going to be in a year? And when you have a lot of uncertainty and volatility in markets and economies and geopolitics around the world, you would imagine that those inflation expectations actually don't have as much oomph in their forecasting power, and that's something Nordea is pointing out here. Link to that's in the description if you want to read that whole thing, or you can hop on the Discord and read oh my man, I have so many great outlooks that I've posted today, especially from MUFG. MUFG came out with their monthly FX outlook, a Japanese JPY based focused outlook, and then a BOJ focused outlook. Like, they went hardcore on releasing a ton of outlooks today. So if you're interested in anything yen, I'd recommend hopping into the Discord, go into the outlooks channel, scrolling up just a little bit and checking those out. Maybe tomorrow I'll cover yen, because those reports are actually pretty Pretty neat. All right. Let's see here. Yeah, so euro dollar went straight to our target from 2 trading days ago. This is, by no mean a win because this was a forecast for yesterday and not today, right? But to paraphrase what I said in the daily plan when we were way down here, if you don't make trade plans in general for the week or the month ahead, you can get chopped up in these intraday volatility moves. The next thing I'm going to go over now is DXY in general, because just across the board, DXY got weaker, right? That's the headline here. So let's go over to the DXY. Now, my expectation is actually still for some dollar strength eventually. Overall, today was actually the largest move down. And by today, I mean like this trading day right here, right? Today was the largest move down in the DXY index since May 3rd last month, right? So we've almost gone a full calendar month. And this thing is moved. Pretty big move. Pretty big move. Biggest move in about a month. When other countries beat expectations, right? We had Europe beat their inflation expectations. We had Canada beat their GDP expectations. And the debt ceiling bill is getting now sent off to the Senate. It makes sense as to why we'd rebound like this and the dollar would fall. However, my own intermediate month ahead macro analysis still makes me a dollar bull. And I'm actually still getting analysis from this morning and into end of day today from institutions that are saying, yeah, tactically we've had to now go short the US dollar, but that's tactically. We still do not see the US dollar like going absolutely significantly lower, like way past like 102 or 101, right? This is not the start of a dollar bear trend. This is probably not the start of a dollar bear trend, right? So this is an extremely important idea. I should share with you guys. That might actually help you a lot when trying to understand timing expectations for multiple events. Personally, while I research events that could occur more than 3 months from now, those events are not immediately tradable, right? I read that stuff to inform me about what could possibly happen going out in the future, right? It's important to know these potential longer term events like a quarter or 2, 3 out, because you don't know for sure if those events will be more or less important to you tomorrow. Because something you were reading today as a forecast for 6 months from now, tomorrow some event could occur, and suddenly that event that you thought was going to happen 6 months from now could be happening in like 2 weeks. Or vice versa, where you're anticipating some macro event to happen in like 2 months from now, and it just keeps getting pushed back, like the recession everyone is planning, right? Oh, there's going to be a recession. Like, we thought there was going to be a recession in the first quarter. We thought there was a recession going to be in the second quarter. We thought there was going to be a recession in the third quarter. Like, everyone is anticipating a recession and just keeps getting pushed back just a bit, just by 1 month, just by a month and a half, just by 2 months. Like, every single month this year, it's just been slightly pushed back, right? So now what's tradable are things happening literally right now and in the immediate future. USDCAD had this, and with the GDP numbers, and I was only able to get in because I was being very nimble, right? Be nimble. And this is a signed copy too. Freaking, freaking Brent Donnelly, man. Freaking Brent Donnelly. Yeah. Oh man, I read through that book oh so damn much. A lot of good stuff in there just to keep your edge sharp, your psychological edge sharp, right? To keep your character sharp when it comes down to trying to stay on top of everything. There's a lot of information and a lot of things that you got to stay on top of in trading. So, yeah, tactically short term, you got to be nimble. So when you start seeing things rotate in favor of one direction, like what I did with USDCAD, go ahead. The risk to reward is there. Now, I saw the sharp reversal. My indicators told me I should consider getting short, so I put on the initial short trade. And that just actually paid off my paper cuts from like the last 36 hours of trading, right? It's like, oh, maybe we'll go up a bit. Okay, that's fine. Oh, maybe we'll go down a bit. Like I already showed you some of those things. And the last part here in this little rant, and we'll get back to things, right? The last part of this is that there's also an in between time expectation between short and long, right? And it's kind of like in the week to week time frame, like 1 week, 2 week, 3 weeks, right? Maybe you can say like a month and a half expectations are kind of intermediate. But it's all very arguable depending on who you talk to. Every trader is going to have a different definition of what's short, intermediate, long term as far as time horizons go. So remember, I said I have an intermediate month ahead US dollar bullish expectation. All that means is I'm going to watch out if these bearish dollar moves reach significantly low levels based off my indicators and my research for the month ahead. Right? If we hit those monthly lows and I'm starting to read research of other traders and they're having the same expectations, it's going to give me the confidence and the competence and the autonomy and the relatedness I need to actually put on those trades with actually some reasonable risk. Plus, overall, I don't believe that just getting those couple of good macroeconomic prints that we just got from Canada and Europe, right? I don't believe that just getting those couple of good macroeconomic prints is going to save the day and cause us to reverse course, right? I'm not totally convinced the US dollar is going to super significant brand new multi-year lows just based off a few economic prints in the last, 48 hours. When there's going to be another plethora of economic indicators that are already printed right now and have had a trend going for months and months and months saying that the US dollar is likely to go higher. Like there's a lot more work macroeconomically indicator wise that has to rotate before I switch my overall bias on the dollar, right? Now, if you want to read up on the outlooks that discuss these economic indicators, because there's a lot of them, like PMIs, and going into this Friday, we're going to get a whole new slew of these weekly outlooks. And they'll be discussing this exact topic. Get into the Plan to Profit Discord and read the documents that I post in the Outlooks channel. Those documents are free, and the Discord is also free, so you got nothing to lose. Alrighty. Let's see here. The next couple things I want to go over are actually central bank related, actually Bank of Japan and Bank of England related. I want to go here. Yeah, there we go. I got two little charts here from the Bank of England. And I'll explain what these are in just a moment. All right. So what we're looking at on the chart is the Japanese 10-year yield, right? And today, the Bank of Japan released a bond market survey. So that's why we're looking at the 10-year yield. Now, in that survey, it shows that there is some relatively increased optimism in the JGB markets compared to 3 months ago, which is actually that bottom left chart changed from 3 months ago. But net overall for that current situation, you can see in the top left, overall it's people are still quite pessimistic. Yeah, not so great. Which leads me to believe the Bank of Japan is more likely to still tighten sometime this year. I'm not going to try and forecast if it'll be in July or October. Just going to try and be positioned for it at both times individually. I'm not going to try and, say, oh, Bank of Japan is absolutely going to, get rid of yield curve control in July. It's just, unless there's some new, press release from the Nikkei or whatever, or Bloomberg on the topic that tilts the market to anticipate some tightening in the BOJ in July or October, specifically, preferring one over the other. It just doesn't make sense to try and force a prediction, right? Because, again, based off everything I'm reading, it's like half the people think July, half the people think October. And again, people's reasons are still kind of up in the air. Maybe I got to read the BOJ uh, analysis and outlook from MUFG. Maybe they have something new that I can learn, right? I still have to read that one. So maybe there's something there. The next thing, and I didn't prepare like any slides or whatever for this. We'll just go to the pound, which also moved today quite nicely. And in all seriousness, I think when it comes down to the trades for the yield spread, I think that pound dollar probably had one of the better setups for buying this dip, because you can see how the yield spread started to go change from red to green. It got real green, it held up, and then you had some pops on good economic data. And it's still quite likely that the BOE is going to be hiking 25 basis points twice. That's still the baseline expectation for the BOE. But while I don't have any charts for this, I can tell you the BOE ran a market survey as well. But instead of, the Bank of Japan did the bond market, the BOE did a survey of CFOs of a bunch of different companies, so that then they could get the sentiment, right? So the survey results give a lot more ammo to BOE hikes, starting with 54% of firms are experiencing high uncertainty or very high uncertainty for their businesses. And this is now the second month in a row where that metric has increased. So this is pretty bad. Probably of more interest to the Bank of England itself, other than just whether or not there's a lot of uncertainty or not, is that year ahead. They asked these people also, hey, what are your expectations for year ahead inflation? Now, I just mentioned Eurozone inflation has been quite unreliable because the people that they're surveying has a lot of uncertainty. So keep that in the back of your mind when I say this. Again, probably of more interest to the BOE this year, is that year ahead inflation expectations from this CFO survey also went up compared to last month's as well. So not only are inflation expectations going higher, but also just overall macroeconomic uncertainty. Not not good, especially if you want accuracy out of your inflation expectations. You want businesses to be relatively certain of the type of economic environment they're about to go in. But if they're uncertain about what's going on, that's not great, to say the least. Not great. Now, there's one thing I did tease at the very beginning of the stream, a geopolitical bit on Pakistan. They may end up defaulting on their debts by the end of June. They're trying to secure some money from the IMF to take care of it, but the situation in Pakistan's not so hot right now, and there's a real risk that the country destabilizes. Um, I mean, hell, a lot of geopolitical analysts would say that the country is already destabilized and things are just going to get worse from here. I mean, what? If Pakistan doesn't actually get this IMF money, probably the most impactful thing that's going to happen to the country is that they're going to have to restrict the amount of imports that they take in significantly because they just can't afford them without this money. And that's going to put a lot more people at risk of starvation and going hungry. And just the final thought on this one is if you want to sow the seeds of any sort of political revolution in your country or economic revolution in your country, just make them poor, hungry, and mad. And I think that settles it for Pakistan. It's gonna be interesting to watch, to say the least. Um, yeah, wow, I've been going for 50 minutes. I thought that this would go on maybe a little shorter this time around, but I came prepared with notes and covering a bunch of different topics, right? So this one went on just a bit longer than usual, and if you want more detailed analysis on a chart by chart basis of my indicators, join the trading group. Come hang out when we do the Saturday video, and you can always message me directly if you just need help doing interpretations on a particular asset. Otherwise, I'll give you feedback on charts in the Discord for whatever assets that you're trading, right? Give you my own interpretations, maybe what I think could happen. And then also, more likely than not, help you. I mean, really, my strength is figuring out, oh, this institution or that blog or this central banker said this, that, or the other about the asset that you're trading. I really like helping out with the research component when it comes down to trading because I feel like, there's so much focus on, how to trade a chart and not enough educational material out there about actually understanding for guys who are super focused on charts, just how to understand the markets that they're trading, right? And getting to that level is really what makes a big, big difference because it stops you from getting tunnel visioned on the day to day movements. You can do analysis every single day and keep up with all the news and all the happenings that are going on and still not get lost in it because you'll be smart and informed and educated just about how the world works. So, with that all said, thank you guys for watching. I appreciate all the support you guys have been giving me. It's actually been really, really great. I wish more people would get into the Discord and talk about their own trade plans because I can go on and on and on about my own. But truthfully, the goal of this is to get more people discussing their own trade plans so that then we can have a larger community at hand to work on sort of crowdsourcing our own research. And with that in mind, thank you guys so much for watching. And I will see you tomorrow for the last daily plan of the week. Saturday, there'll be a video for members of the trading group. And then on Sunday, we repeat the whole thing all over again. Thank you guys for watching. See you in a bit.